Monetary Policy Committee of the RBI has taken an unconventional step today by cutting the repo rate by 35 basis points. It has also maintained the stance at accommodative, but has also reduced the FY20 GDP forecast. You're watching Editor's Take. I'm Sakshi Batra, and with me is Gaurav Chaudhary. He's the Deputy Executive Editor of Moneycontrol, and he's going to decode the policy fine print for us. Thanks a lot, Gaurav, for joining in. Well, what's the rationale behind 35 basis points cut? Why has the RBI done this for the first time instead of going for the conventional multiples of 25 basis cuts or raise hikes?
Yeah, so this was, one could have seen this coming actually. A couple of months ago, the RBI Governor Shaktikanta Das had indicated that he was in favor of actually breaking away from the 25 basis point or multiples of it, changes in repo rate on multiples of 25 basis points. In fact, in while delivering a lecture, he did say that what is so sacrosanct about 25 basis point, we should look at ranges beyond that. Why cannot be, say, a 15 basis point or a 35 basis point or a 45 basis point, etc. To that extent, while one would have expected this to have come in the last policy, which was the immediate policy after he had spoken about such a possibility, it didn't come. And this came at the least expected of time, because one, this was the first policy after the budget, and two, everybody was expecting a 25. The markets had actually factored in a 25 basis point cut. So now there was an outside possibility of 50 basis point. Markets were expecting a 50 basis point that would have cheered the markets, but the MPC and the RBI went for a jugular. It went for the midpoint, which is 35 basis point. And going ahead, this could well be the new normal. So, in times of high inflation, probably inflation starts rising at some point in time, 12 months from now or a little later. And when the RBI will have to look at a slightly less accommodative policy, we might well see RBI or the MPC actually recommending a 50 basis point cut, or maybe a 15 basis point rise. That is something that actually allows the RBI more elbow room on interest rate related decisions, instead of keeping the range limited to only multiples of 25 basis point. In fact, during the post policy press conference, the governor went ahead and said that there is nothing sacrosanct or nothing sacred about 25 basis points and multiples thereof.
Absolutely. And also Governor Shaktikanta Das did say that in the near future, at least, rate hike is off the table. It still has maintained an accommodative stance. Inflation still remains well below RBI's comfort level as well. So how many more rate cuts do you really expect from here on, and by how much?
So this is the fourth rate cut since February. And since his first policy, since the first policy, Shaktikanta Das actually oversaw after taking over as the RBI governor. So in February, in April, in June now, and now in August. And going by the phraseology of the accompanying commentary of the monetary policy, it looks like we are not done yet. And it could well be, by the time the next couple of policies come in by the end of this year, or by this year ends, we could see a few more policy cuts. If you go by what has been said in the commentary, RBI has clearly shifted the focus from inflation management, because inflation genie, according to the MPC and the RBI, it remains firmly bottled up. So while inflation control remains its primary mandate, with inflation remaining comfortably within 4% range, and much below actually 4%, the 4% threshold, RBI is now going to focus more on aiding investment revival and aiding growth. There are worry lines that have emerged on the growth prospects, which they have acknowledged. Those need to be addressed. Even though the RBI governor has gone ahead and said that this slowdown is cyclical, but it clearly needs the RBI support. Without that seems to be the belief that seems to be coming out of the policy statement, that at least for the next couple of policies, the central bank's focus will shift to aiding growth, given that its primary mandate of inflation management and taming inflation remains firmly under control.
Absolutely, and you've hit the nail on the head, because growth clearly is taking center stage right now. 6.9% is the new projection for FY20 GDP growth, brought down from 7%. So is that a big concern? And do you see this as a shift in the policy stance as well? Because, not just policy stance, but the way policy is focused on. In the previous policies, even in Shaktikanta Das's tenure, we've seen a clear focus on inflation. But this time around, he's clearly talked about how the revival of investments
Yes, absolutely. And that's what I said. So inflation management remains the Monetary Policy Committee's primary mandate. And that's a statutory mandate, because it was done through inflation and this mandate was given through a law. But inflation targeting is now a legal requirement, is a statutory requirement of the Monetary Policy Committee. But having said that, the RBI, the MPC's mandate is to keep inflation within the range of retail inflation in the range of 2 to 6%. That is 4%, essentially 4%.
Right.
Now, for the MPC is of the view that it's going to remain firmly below 4%, at least for the next 12 months.
Right.
If it remains firmly below 12%, its primary mandate is taken care of. But the RBI governor has clearly said, and also the policy statement clearly said, that investment needs to be revived. There is a slack in demand, demand is slackened, and investment activity remains extremely sluggish, both from the data, the proxy indicators and the high frequency indicators that are available, as well as the RBI's own business confidence and capacity utilization surveys. So there seems to be a clear shift in focus of reviving investment. And investment, one way of reviving investment when demand is low is through reducing capital cost. RBI, obviously, it's not within the RBI's mandate, or it is not within the RBI's responsibility, because it's not dealing the fiscal side of the economy.
Right.
So it cannot boost demand. But it can deal with the supply side, and the one way of dealing with the supply side is to bring down cost of capital. And cost of capital come down when interest rate keeps on coming down. And a lot will depend on to what extent the banks actually pass on the rates. The transmission, the extent of the transmission will be critical for this.
Absolutely, and that's what I was coming to. We've already seen, so far 100 basis points and over rate cut that has been seen on the repo rate front, but the transmission by banks has been far dismal. So far, only out of the 75 basis points, 29 basis points have been passed on. So from here on, do you think this gives more room to the banks to actually cut rates? And how soon can we expect banks to really cut the lending rates and deposit rates from here on?
SBI is the biggest lender. State Bank of India already signaled they intend to cut rates, which they have done already. We expect more banks to follow. But the point is not about cutting rates. Point is the extent of which they are going to cut rates, and for which category of loans. So far, what we have seen, every rate cut by the RBI has been followed by an interest rate cut of only fresh loans. What about existing loans? And even in the case of home loans, where people have floating home loans, the rate reduction has not mirrored, the extent of rate reduction hasn't mirrored the extent to which repo rate has been cut. I think at some point in time, the RBI might get a little strict. It can come up with a hard rap on the knuckles of banks, but maybe that's about still 3 months away.
Absolutely. But what is the pain point right now? And we have been discussing in many of our other shows as well, that right now, what is the pain point is the slowdown in consumption. That is what we are seeing. And from the last 11 months, auto sales have been continuously dragging. They have been down. Do you think this rate cut could, bring cheer for the borrowers as well? Could the auto loans also come down?
So there are two things. One, automobile sales have contracted and have remained extremely sluggish for several months now. What does it mean? So there is no brisk activity that is going on in automobile showrooms compared to, say, 12 months ago. And so people are buying fewer cars. If people are buying fewer cars, that means that's reflective of very weak household spending. And so a lot will depend on how festival season sales picks up. And we are just about a month away before the festival season sales season kicks in. As we speak, and as the RBI presented the monetary policy, the finance minister has met the automobile industry representatives to discuss a way out. Please remember, when a similar slowdown happened in 2008 in wake of the global financial crisis, the central government had cut excise duty in a staggered manner by about 6 percentage points, from 14% to about 8% between 2008 and 9. But that window is not available with the central government now, because excise duty for automobiles, central excise duty for automobiles do not exist. It's been subsumed within GST. So if any rate cut in automobiles to cut prices and subsequently boost demand will critically depend on how GST rates are brought down. I do not think GST Council is going to agree to a lower GST rate. So it's going to be very, very important to what extent the central government can actually come about with some kind of a fiscal innovation or stimulus, a fiscal stimulus for the automobile sector to boost demand. And if at all any kind of stimulus or any kind of policy that gives an impetus to the automobile sector has to come, it has to come in the next couple of weeks, just before the festival season kicks in.
Absolutely. Thanks a lot, Gaurav, for sharing all that insight with us. Well, the RBI continues to ease policy rates in tandem with how the central banks around the world are also working. Right now, all eyes will be on the banks to find out to what extent will these rates be actually passed on, to what extent will lending rates come down, and to what extent will borrowers also get the benefit of cheaper loans from here on. Thanks a lot for watching this edition of Editor's Take, and do stay logged on to moneycontrol.com for more news and updates. Thanks for watching.